it is being noticed. You got Jim Rickards saying $27,000 an ounce gold by dividing the gold supposedly held at Fort Knox by M1. You got others that say other things. In a world where Bitcoin can be $100,000, no big deal, why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash? I guess it could. In theory, the Treasury says any country that wants to deliver their gold to the U.S. Treasury will pay them 130 grand an ounce. Okay. Isn't that what the price is? Yes, it's inflationary. Yes, it's going to have ramification. You could argue we have been toting the Banana Republic line for quite some time.
Gold revaluation has emerged as a potential solution for addressing national debt and expanding the money supply, gaining traction among economists and gold advocates. Unlike the concept of minting trillion-dollar platinum coins, which focuses on increasing the U.S. money supply through a centralized approach, gold revaluation offers a broader, more democratic alternative. Governments holding significant reserves could see a dramatic increase in their gold-backed assets by periodically adjusting the price of gold. This increase in value could then be used to back their currency or create additional reserves, providing a way to manage national debts without resorting to the inflationary risks associated with printing more fiat money. Historically, the U.S. has used gold revaluation as a tool, most notably in 1933, when President Franklin D. Roosevelt devalued the dollar by 40% by raising the price of gold. This action helped the U.S. mitigate the effects of the Great Depression, demonstrating the potential of gold to ease economic hardship. Western nations, especially those in Europe, hold substantial gold reserves, often more than the U.S. By revaluing gold, these countries could increase their financial reserves and influence the global value of currencies and assets. As a historically stable store of value, gold provides a more tangible and secure alternative to fiat currencies. Despite the potential advantages, the U.S. may be reluctant to embrace gold revaluation due to concerns over losing control of the global financial system. Financial analyst Andy Schectman suggests that revaluing gold could undermine the dominance of the U.S. dollar as the world's primary reserve currency by benefiting other nations with significant gold reserves. For decades, the U.S. has worked to minimize gold's role in the international financial system, preferring a fiat currency system that offers greater control over money creation. However, proponents of gold revaluation argue that it could provide a more stable and sustainable way to manage national debt, reduce dependence on fiat money. Now, we present the clips of Andy Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
That we are entering that period of time. Rob alluded to the fact we're insolvent, approaching, I think we're at 120% or so of debt to GDP. Where I come from, those countries way back when, anything over 100% debt to GDP were considered banana republics. And those were usually the countries that had questions surrounding their electoral process, their judicial system, all of the things that have plagued this country. I mean, you could argue we have been toting the Banana Republic line. And in a world where interest rates are rising higher and fiscal responsibility is not, hasn't shown any signs, as Rob says, show me that you're going to cut spending and I'll believe it. I think this is something they notice, certainly, that this is one option to revalue gold to a level high enough to dramatically pay down their debt. I think the BRICS nations would be more than happy with that. And when you talk about whether it be the unit, Project Enbridge, and of course what the BIS did to Project Enbridge is something that I consider to be right out of a James Bond movie. It's more or less espionage at the 12th hour, kind of saying we're going to pull the plug on it. We can talk about that either or not. But I think when you realize that these countries, whether it be through something like the unit or something that would be traded over Project Agora or Project Cedar. Rob's talked a lot about all of these cross-border payment programs that are issued by the West and by the BRICS. I suggest everyone watch that video that you did, Rob. It was very, very, very informational. You went through all of these platforms and what they could potentially offer. But to me, the common thread in all of it is a marriage between blockchain technology and gold and a new system. And to peg a new system that has lost all credibility to something that inspires credibility. Yes, I see it. It's right here on the blockchain. It's audited independently, continuously, and it's pegged to and backed by gold. The only way you make that work, and that it's interesting, the Swiss had a 40% gold backing way back when. That's the number that the BRICS nations have said in theory they chose. And I think that is something that would work. You put gold at a much, much higher level. You peg it to gold, put 40% gold backing or whatever it is, still gives you monetary latitude. And then Craig brings in Judy Shelton. I wonder if they will nominate her to one of the governor positions. She won't replace Powell anytime soon unless he steps down, as he has, I think, 2 years left. But she is an advocate for the gold standard, and more relevant to me, everyone talks about de-dollarization. Yeah, that's important, right? I mean, the settlement currency, it's important. But to me, it's more along the lines of where's everyone putting their excess? And it used to go into treasuries. And the lack of demand for treasuries, to me, is the real problem. Who's going to finance our debt? Does it become hyperinflation as the Fed is the lender or the purchaser of last resort, or yield curve control, as Craig has talked about forever? These are all possibilities. What Judy says is, well, hey, look, no one of any intelligence would buy our treasuries of any duration. I think they're uninvestable right now, personally. She didn't say that. I'm saying that anything 10-year duration or higher is uninvestable. You're out of your damn mind to do it. But she says, well, we'll just have it redeemable in gold. Well, that's the first smart thing I've heard come out of a politician's mouth in a very long time. So yeah, that would be very, 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 a very, very smart move, I think, and would rekindle demand for our treasuries. But yes, I personally think, and I've been talking about it for a long time, that they will indeed revalue the price of gold. The central banks will, and it will at that point then be tied in some form or fashion to a new currency system. Now, I don't know how far away that is, but to me, there's, the revaluation of gold by the BIS, the massive accumulation. Look at the repatriation of gold. 40 nations have all brought their gold home. Now, the conventional wisdom is that it's because of the weaponization of the treasury market. No one trusts the Bank of England or the New York Fed anymore to safeguard their metal. Look at Venezuela. Can we have our gold back? No, said the Bank of England. No, you can't. But dig deeper into it, and I know that the unit settlement token has been kind of waylaid at this point. We'll see what happens with it. But if you read the white paper on it, it talks about the gold would have been held within the borders of the countries that possess it, would mint their own tokens, and the currency aspect, the 60% currency and the 40% gold, would be held in escrow accounts within the borders of the countries that possess it, and independently and continuously independently audited to protect the integrity of the system. But no central authority, no Bank of England, no New York Fed. It's more along the lines of a cooperative system. Anyways, I don't want to get too far down the rabbit hole, but what I will agree that I do think that is something that they notice. Look, you can inflate, you can default, as Richard Russell always said, either inflate or die. I've talked about finding a villain, Xi Jinping and Putin and OPEC, for dumping the dollar. That may or may not happen. Option 4 is revalue gold to a level that most people think is impossible and peg it to a new system. And yeah, it's an option that I think probably is the least painful of the three.
Despite recent optimism surrounding cultural and political shifts, significant financial risks persist, particularly concerning inflationary pressures and the instability within the banking sector. Inflation continues to be a pressing issue, with consumer prices, particularly for essential goods such as food, housing, and energy, rising at a rate that far outpaces wage growth. As of October 2024, the Consumer Price Index, CPI, showed a year-over-year increase of 3.7%, signaling that inflation remains a substantial burden on household budgets. While the Federal Reserve has taken steps to address inflation by raising interest rates, these efforts have not fully alleviated the pressure, and there is growing concern about the potential negative impact on economic growth and the broader financial stability of the country. In addition to inflation, Andy asserts that the banking sector is facing significant stress, particularly among commercial banks holding enormous short positions. Despite attempts to suppress the market movement, the market continues to rise, leaving these financial institutions struggling to balance their books. This growing financial instability underscores the risks of an overly optimistic market environment. While asset prices rise, these gains primarily benefit the wealthiest individuals and large institutions, exacerbating wealth inequality. Meanwhile, many Americans continue to feel the effects of inflation as the rising cost of living outpaces income growth.
I think what Rob said, what Craig said is spot on, especially the part about the massive short positions that have been bleeding dry. The commercial banks have been looking for a opportunity to square their books, and I've been wondering how the hell they were going to do that in a market that just continued to march higher, and every time they would waste ammunition by hitting it, it would go higher very quickly. And the down days have been very mitigated, very shallow. And so I think this was an opportunity. Look, I mean, part of the exuberance statement, because it is in the respect, but it's justified on one hand in that we've all lived through bizarro world for the last 4 years on many levels. And I think people are tired of bizarro world, and they're tired of a country that favors lifestyle over merit and hard work, that favors equality over equal opportunity. And I think we're sick and tired of watching our country and the things that made this country enviable to most of the world, our culture, be whitewashed right out from underneath us. The judicial system, the electoral system, the immigration system, the lawlessness, the wokeness, and it's a breath of fresh air. And I think that has also translated into the risk on trade, where there's no reason to be defensive anymore. It's hope springs eternal, but that's misguided. And I think that's exactly what the bullion banks were counting on and hoping for, and use that opportunity to indeed flush out, the weak-handed money managers that drop the price down below the levels that trigger selling and selling and selling and selling, and they're covering. But to Craig's point, the debt, that's not going anywhere. In fact, it's obviously will probably get worse in a weaker dollar environment with low rates and a weak dollar. That's hugely inflationary. Inflation is coming. The loss of purchasing power is coming, and really what this translates into, which is somewhat concerning for a lot of the country, is again like the Cantillon effect. The wealthy will get wealthier as their assets go higher in price, which ultimately will translate into price inflation as that trickles down into the economy. We've seen this playbook over and over and over again. And pivoting away from inflation or fighting inflation when they're 65% away from their target, when Trump is inheriting an economy where the numbers that he supposedly, or the book, the economics that he is inheriting, are far from what we're being told. I mean, inflation is much higher than the 3.5% and that we're being told. Unemployment is much higher than the numbers that we're being told. The economy is in much worse shape. And so, I think that especially with what happened, I guess, to me, the big thing that I'm most concerned about is, we've seen the rates on the 10-year go higher as they've lowered the front end of the market. And again, the banks are loaded on 10-year treasuries, I find to be a kind of a red flag. And the fact that it's gotten virtually no attention, I don't think we're out of the weeds yet, not even by a long shot. And I think that people should not lose grip on their precious metals. This is what the commercial banks are counting on, for people to shed their positions in metals and make it easier for them to cover their shorts. But this is the time, I think, to really hang tight on your grip and hold true to your conviction.
The U.S. financial system faces a precarious future, with rising interest rates and an unsustainable national debt creating mounting pressure. If demand for U.S. Treasury bonds continues to decline, the Federal Reserve may step in as the purchaser of last resort, potentially fueling inflation or even triggering hyperinflation. Yield curve control could be used to manage rising interest rates, but this may distort markets and lead to broader economic instability. In this environment, incorporating gold-backed money into the system gains traction as a potential solution, though it comes with risks, including inflationary pressures and market volatility. If implemented, Revaluing gold could offer short-term relief, but may ultimately destabilize the monetary system. Please share your thoughts on Andy's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.